Greetings, it's your helpful housing analyst, William Leach, providing an overview of financial models. If you haven't already, pause the video and read the companion white paper that this video accompanies. On to the models. In the first part, I'm going to walk you through the common report pages produced by a financial model. In the second part, I'll give you a brief look at the internal components of a financial model. Let's take a look at the reports. This common report is what I call the summary page. It provides as much information about the deal as it can in as little space as possible, kind of like an executive summary. In the very top, we have some identifying information. What's the project name? What type of deal are we talking about? What areas does it qualify for? How many units does it have? And what are we building? Some of the data that gets involved in a summary is what are the overall sources for the transaction? Remember, the purpose of a pro forma is to determine, do we have enough sources to cover the development's uses? And this takes a look at it from the permanent perspective, not from a construction period perspective, but rather from the end game. After it's all said and done, what will the sources be? What will the uses be? On this right-hand side, this is only showing you a broad view of the uses. There's a lot more detail that goes into these categories, and this is just giving you a general view of it. It shows you the total project cost and the total project cost per unit. Underneath these, we have the source pay-in schedule. This shows you some of the larger pay-ins or funding that's going to happen during the transaction, and it reminds people when those fundings are going to happen. Are these monies going to come in at perm conversion, or are they going to come in at closing? This helps people get on the same page about the timing. Over here, I have a section that shows here's some of the temporary sources for the project, talking about the construction loan and the amounts of the credit proceeds that will be paid during the construction period. Okay, this is a temporary view of the project. Then we get into some general information, some demographic information. How many one-bedrooms are there? How many two-bedrooms are there? What's the average rent? Here we talk about the developer fee schedule. Some of these schedules can be swapped with other schedules depending on what's important to the reader. Down on the bottom left, we talk about the rent schedule. We try to make a nice compressed view of the various units and the bedroom sizes and the AMIs that those units target. In the bottom right, I like to add a little bit of general data that people want to know. What's the debt coverage ratio, or what's the TCAC tiebreaker? How long is construction? Some general information that people often want to know with this little bit of real estate. On the second page of this report, which I continue to call the summary, I typically print these two pages together. This gets into the details of the cost. You'll see that there's many more line items than the first page showed. And this shows you each line item, what the amount of that cost is going to be, how much of that's going to be new construction basis, how much will be acquisition basis if you're talking about an acquisition deal. And it gives you a summary of how much those costs are on a per unit basis. To the right of this, it shows you what are the operating expenses. Remember, the second key reason for a pro forma is to determine, does it have enough income to cover its expenses and debt service in the operations phase of the project. So this is one component to that. What are the operating expenses? And both of these look like detailed line item budgets showing you those key needs, development needs, operating needs. Underneath it, we have the tax credit calculation saying, hey, if you generate this much eligible basis, what is that going to equate to given the tax credit rules, tax credit rate factors, and a tax credit price? What's that going to generate in proceeds? This 19 million, you'll zoom back to the top, you'll notice 19 million of tax credit proceeds. This is generated through calculations, and this is showing the viewer kind of what those calculations look like. Now, I'll point out that this report page has no actual calculations on it. It is just showing you results of other calculations deeper in the model. Okay, the next page I'm going to point out is a cash flow page. This is saying what's going to happen on this transaction year over year over year over year in operations. Cash flow pages can get printed out to be 15 years, 20 years, 30 years, 55 years. It all depends on your needs. And this one I printed out 20 years worth of cash flow. Just starting at the top, you'll notice that it has your incomes, less your vacancies, your adjusted gross income. Then it says, hey, what expenses are we going to incur? We're going to have some expenses that inflate at 3.5%, let's say. Some expenses we choose to inflate them at 1%, or maybe don't inflate replacement reserves at all. But here's your expenses on the transaction. Then we start talking about debt service. You want to make sure you meet a certain debt service coverage ratio. You may or may not have reserves or subsidies in your transaction. This aspect of the model is different on every single transaction, and we'll get into that a little bit inside of the report. As you get down, after you get to cash flow after debt service, then you start talking about how are these funds going to be split up. It's often nicknamed the waterfall, and this also is different on every transaction. But as you get to the second page of the cash flow, same things, but years 11 through 20. And then the last thing I'm going to point out is the monthly cash flow. The monthly cash flow says during the development, what's going to happen on a month-by-month basis? How much money am I going to start with in the bank? How much money am I going to earn on interest, operating income? What monies am I going to need to bring into the deal this month? What monies are going to come out of the deal this month? If I come up short, am I going to need to draw on my construction loan and have a construction draw? Am I going to use any of my money to pay down the construction loan? And with all of these things happening, what is my ending bank balance? Well, this project, as you can see, has a little bit of money in the bank in the first month, and then it just borrows on the construction loan, as most new construction projects do. So the main purpose of a month-by-month sources and uses is to determine how big the construction loan balance is so you can determine the interest cost for your project. So this next section talks about the starting balance for the construction loan. Do I draw on it? Do I pay anything down? And therefore, what's my balance? The last thing that I do on a month-by-month calculation is talk about operations. This is a new construction project, so you don't see any operations happening at the beginning of the development period. But if it was an acquisition rehab, you'd see operations, revenues, incomes, expenses, and net income. And what I do is I like to phase out current operations. They'll go down, 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 down as you rehab the units. And then I ramp up future operations, ramps up, up, up as you place the new units in service. Either lower expenses because you've done utility improvements or higher rents because you've completed the rehab. So this type of a schedule, monthly sources and uses, I run it out about 28 months. This is showing months 19 through 18. And here's showing months 19 through 28. And that's what the common report pages look like for a financial model. Now we're going to dive just briefly into the financial model itself and talk about some of the differences. This is the summary page that I showed you most of those items from. I'm going to zoom way out, and you can see that it has the first page, the second page. We talked about cash flow pages. It just determines how many of these cash flow pages you want to print out in the process. And I'll point out, none of these are actual calculations. They're just referencing other places in the model. My overall general rule for building financial models is separate your calculations from your inputs, from your reports. This gives you the most flexibility to have your calculations done in an easy to audit manner. It gives your users of the model the most convenience to input as many pieces of the deal, many of the assumptions in one place. And it gives your report readers, your users of the financial model, your consumers of the financial model, the most compact and concise view of all of the information that's necessary. So taking a look at some of the fun things that you can do once you segregate your model as such, like I showed you on the inputs page, you can have many different inputs that are important for the transaction. I won't go through each one of them. That'll be for a different lesson. but it allows you to get a lot of information in one location, and the person preparing the financial model can do so efficiently. Also, in the calculations area, you can have huge, robust calculations and you can organize them by certain things. Well, let's talk about the developer fee calculation. Let's open up this section and we can go line by line. It's a very complicated calculation to know deferred developer fee, minimum deferred developer fees, how much developer fees for acquisition basis and generates acquisition basis. Very complicated calculation, and it takes quite a bit of room. You would not want to have any of this print out for a consumer of the model. This is just way too far in the weeds. You want to know that it's working, and you want to be able to audit it in case a rule changes or you need to make a change. But you want your users to just say, hey, let me look at the summary page. Let me look on the development uses. Let me find developer fee. And then there you go. I know how much the developer fee is going to be. Okay. Another nice thing about this is you can do error handling. I have a whole section in my calculations page that's checking for errors. And you can teach it as many errors as you want. And it'll spit out, hey, I have an error. Sometimes the error you don't care about and you just overwrite it. But most of the time you care about it. And on my summary pages, we'll have it yell at me in this text. It'll tell me the error text. It'll tell me, hey, you have a problem. Don't go forward. Don't print this out. You need to solve that problem. So I go to my errors and I read all about it. So that's one of the convenience things. Another nice convenient thing is if you need to put some huge, pieces of information. Let's say the rent and threshold eligible basis limits by county. Yikes. Look at this raw data that nobody really wants to see. You just want to be able to look it up based on what county you selected. And so segregating your calculations onto a single page really helps you to keep that information out of mind, even though it's absolutely necessary. So another key thing I like to do is I like to highlight inputs as blue. You can see blue says I'm an input and black says I'm a calculation, don't mess with me. You'll notice I have other tabs for inputs. Inputs information about the cash flow. Here you can do all you want. Insert rows, tell rows to hide. That's what these gray rows are. These are hidden. And then later, the summary page can say, hey, I'm going to put only the rows that matter. I'm going to highlight the rows that I'm told to highlight. I'm going to underline the rows. I'm going to add spaces. This will generate what looks like a nice little report. But this gives you all the flexibility to do all the calculations you need, drag rows in between things. It gives modeling flexibility and concise reporting together. Also, it lets you do things like in your detailed line item budget, you could have your uses where you want to add lines, remove lines, say that this line is not applicable, or create subtotals that you actually don't want to show on your summary page. You just say, hey, I just want to show people a nice, concise, here are my line items, here's my cost. And so it gives you the flexibility to get a little bit deeper. It gives you the ability to say, hey, my legal costs. I've got a bunch of different legal line items. I just want to put a couple of different reasons for legal so I can detail it for myself. It gives you that flexibility. Operating expenses, very similarly. Rents, very similarly. You want to add some rows, but you don't want your summary page to have blank rows. Go ahead and do it, and your reports will stay nice and clean. I pray this financial modeling discussion proves helpful to you in delivering housing to Californians. God bless.